Hello, America. I'm Camille Chandler, and this is Qualitative Listening. Today, I'm going to tell you how to make money during QE. But before we do that, I'm going to explain the current state of monetary policy. The Federal Reserve has not officially resumed quantitative easing. However, it has taken significant steps toward easing its monetary policy by slowing the pace of quantitative tightening. Federal Reserve's recent actions at its March 2025 meeting, the Federal Open Market Committee announced a substantial reduction in the monthly redemption cap for Treasury securities from 25 billion to 5 billion, effective April 1st. This move aims to slow the pace at which the Fed's balance sheet shrinks, thereby increasing liquidity in the financial system. While this adjustment doesn't equate to the asset purchases characteristic of QE, it indicates a shift toward a more accommodative stance. Analysts view this as a response to mounting economic pressures, including trade tensions and signs of slowing growth. Next, market expectations and speculation. The Fed's decision to slow QT has fueled speculation about a potential return to QE. Some market participants anticipate that continued economic challenges could prompt the Fed to resume asset purchases to stimulate the economy. However, as of now, no official announcements have been made regarding the initiation of a new QE program. Alright, making money during or from quantitative easing often comes down to understanding how it affects the markets and positioning yourself accordingly. Here's how people and institutions tend to profit from QE. Number one, invest in risk assets. QE involves central banks buying bonds, which lowers interest rates and pushes investors towards riskier assets. Why it works. Low interest rates make bonds less attractive, so capital flows into stocks, pushing prices up. Strategy. Invest in major indices like the S&P 500 or growth stocks that benefit from cheap borrowing and investor optimism. Number two, buy real estate. Lower interest rates equal cheaper mortgages, and that equals higher demand, and that equals rising property values. The strategy, buy real estate early during a QE cycle and ride the appreciation wave. Rental yields can also improve if the economy is stimulated. Number three, invest in commodities or inflation hedges. QE can lead to fears of future inflation. Strategy, buy gold, silver, or TIPS bonds. Bitcoin has also been viewed as a modern inflation hedge. Number four, borrow cheap and invest smart. QE lowers borrowing costs. The strategy, borrow at low interest rates and invest in higher return opportunities. Caution, this is leverage and it can boost gains and losses. Number five, position in fixed income. When QE starts, bond prices tend to rise and yields fall. The strategy, buy long duration bonds early in the QE cycle. Capital gains happen as rates drop. 6. Trade the Fed. Some traders monitor central bank announcements closely and trade assets like Forex, bonds, and indices based on expectations around QE. So the strategy, go long on equities or short-term dollar when QE is announced, especially if the market wasn't expecting it. Alright, that's the show, folks. As always, thanks for listening to Qualitative Listening.